Hello, everyone. Thank you for coming to the Investing in Startups panel. It's the last panel of the conference, and then we'll be back in 206. But turn it over, and they'll each give a short introduction.
Great. Thank you, Aaron. And thank you to the Penn Blockchain Club, Wharton, the Penn community for inviting us all here today. Really excited to be back at my alma mater for this panel. Obviously, Penn represents, best-in-class engineering, your Wharton, and leading-edge finance. Brilliant minds here, and I think that we have an opportunity to be one of the #1 players as a university guiding the path forward for crypto and blockchain. So excited for you all to be here. My name is Marc Weinstein. I am a principal at a venture capital fund out of Los Angeles called Wave Financial. We invest in both equity and tokens and are trying to elevate the crypto industry towards maturity.
Hi, I'm Nisa, Amolis. Thank you, everybody, for coming. I am a venture capital investor. I've been investing for the past decade, primarily as a family office, but also out of Scout Ventures. And I'm focused on building out the infrastructure for the future of finance as a thesis, and started out as a securities lawyer. So I did not participate in ICOs, but as things moved towards more regulation, I'm more interested and more involved.
Matt Shapiro. I'm a principal at Multicoin Capital. I'm not a Penn alum, but please don't hold that against me. Multicoin is a thesis-driven investment fund focused on crypto assets. We invest predominantly in cryptocurrencies themselves and tokens. We really focus on fundamental research and analysis of blockchain protocols, consensus mechanisms, token design, teams, market opportunities, and on-chain data analysis to make that.
Hi, I'm Jalak, Jobanputra. I am a Wharton undergrad alum from 1994. I have no problems aging myself. I am the founder of Future Perfect Ventures. I started the fund in 2014 with a thesis around decentralization, primarily blockchain with the intersection of AI and Internet of Things. We're currently investing out of our second fund. We're based in New York City, but invest globally.
All right. Well, thank you, everyone, for your time and for coming in today. We've got an exciting panel, so let's just dive in. So can you guys talk about the difference between traditional venture investing versus investing in the crypto space? Nisa, you can take it away, yeah. We'll start with you and rotate around.
I think in traditional venture, you look at all the things like the team, the market size, product market fit, competition. I think all of those are still relevant in blockchain investing. I think if you're also looking at investing in nascent markets or protocols, you're going to focus on other things like governance and community, and how the incentives of token holders are aligned, how developers are incented to stay on the network once their market, for instance. So I think it depends what sector you're looking at, but I think traditional venture capital skill set very well suited to long-term build and long-term mindset, especially at this time.
And what about you, Matt? What do you think?
I think they're actually very similar and very different in a handful of ways. Like it's similar because you're still talking about an early stage project. It still needs a team. It still needs to find product market fit. But in crypto, it's a little bit different, just really because of the lack of precedent and how you think about value creation versus value capture. I think in traditional startups, you have a company that creates value. Right? They sell a product, they make revenue, and entirely make costs. And you could wrap your head around cash flows, or even if you're not making cash flows, you have a user base that you can monetize, or someone will buy through distribution. In crypto, you don't necessarily have that, right? You have a lot of different designs in tokens themselves, and there's a vast difference between creating value for a protocol, but actually having some of that value accrue to the token. And so, when you're thinking about investing in crypto, you're taking on, a lot of the analysis that you would do with early stage, venture, but you really have to think critically about what asset you own and why it will do that. I think that's probably one of the bigger differences.
I think there are a lot of similarities. So our first fund focused on equity. I've been a VC since '99, so early stage equity is something I understand really well through different market cycles. But I've been a big supporter of tokenization. I believe that we are going to see more and more things tokenized. We're going to see new business models start to emerge that we can't even dream about right now, or don't even know what they will be. I think the challenge of we just got way ahead of ourselves in 2017 with all these projects, fundamentally just raising money under the guise of crypto economics and token models. And so where I think we're getting to right now is are the things that have been mentioned before, which is what's the right governance model. That is not going, we're not going to figure that out, and that's going to vary by use case. And so we're not going to figure that out anytime soon. I should say we will figure that out. What we're seeing a lot of right now, because we do focus on the earliest stages, is entrepreneurs raising small equity rounds with the notion of figuring out what those right token economics are going to look like. So even if they want to figure those out down the road, they realize that they need some time to build and see how the market reacts before they go public with the tokens. And that's very different from 2 years ago.
Interesting. So I'm going to skip ahead. I mean, Union Square Ventures, I think in 2016 or early 2017, came out with something called the Fat Protocol thesis. Existing internet, most of the value accrues to the application layer where consumers are. But if you could tokenize the underlying protocols, DNS, HTML, et cetera, they would be centi-billion-dollar businesses or trillion-dollar businesses today. I think what we've seen in the market is that, we don't know where value capture is going to happen. How do you feel about the Fat Protocol thesis? Do you think that it's true always? Do you think that it's true sometimes? Or do you think that we finally realize that it's not?
I think it's too early to know.
Okay.
I
like that answer.
I think we'll know once we have decentralized applications that have been built that have millions of users as opposed to just a couple thousand. But I think, part of that thesis focuses on data sharing and the ability for blockchain to enable data sharing. And it certainly does, but I think not all data will be shared. And you can also, like Enigma, you can build something that's off-chain or build your own protocol. Doesn't necessarily have to be built on that protocol. So it's unclear where the value will be captured.
I would say maybe, right? It's nuanced, right? We're big
so
fans.
We don't know.
Well, I think it's more nuanced than that, right? I think that look, we're big fans of Union Square Ventures, and Joel's a super smart guy, and I think he's helped push the ecosystem forward tremendously. But when we think about it, it really depends on what your definition of a protocol is and where it fits in the stack. So I think that layer one protocols have the ability to compete for a global state-free money. And I think something like that has the ability to acquire monetary premium. And I think that in that case, a fat protocol, whatever gets that use case, will almost certainly be a fat protocol. So I think it's certainly relevant there. I think that as you move further up the stack, there's still an opportunity for a lot of these protocols to create, to be fat and create value. But there are also going to be opportunities for companies that build on top of these protocols to create a tremendous amount of value as well. So I think as you move further up the stack, you could see different risk-reward profiles where you can invest in a non-layer one protocol per se that can accrue value as a fat protocol, but some of the there may be disproportionate value for the companies building on top of it, where one or two or three companies drive the vast majority of the value to that protocol, and maybe they make outsized, risk-adjusted returns.
Yeah,
Jalak, what do you
it's
think?
going to be boring and agree.
Yeah.
I think what makes this sector so interesting, though, is that different protocols will have different economic economics accrue to them. But I think at the end of the day, it's all going to be about what value is going to the end user. And I actually was never, I did not subscribe to the fat protocol thesis, and we did not in the way we've invested. But I actually think as time goes on, we may see more distribution of value, from, I still call it middle, so you have layer 1 and then what I call middleware, which a lot of people call layer 2, all the way up to the application layer. So, we'll be able, but what I love about this is it's going to be, I think about it in terms of overall meritocracy. What is adding the most value? What application, what piece of the technology is adding the most value to the end user? And hopefully, we'll be in a world where that's where the value will accrue.
I recently read Nick Carter posted about Mastercoin, and Mastercoin was one of the first ICOs well before some of these others, and it actually led to the creation of Tether, which has moved billions of dollars on the Bitcoin network. And yet, if you look at a price chart for Mastercoin, it's near zero, right? So clearly, you can add value but not capture that value, as you were saying. So it's going to be interesting to kind of figure that out. On the point of value capture, I think we've moved from ICOs in kind of 17, early 18. A lot of pump and dump schemes, obviously, but there were some real companies raising during that trend. And now we've moved over to utility tokens are dead, right? Like there is no need for a token within many networks. How do you guys feel about where we are today? Is there a need for applications to have their own token? In some instances.
I think it depends. I think in some instances you will need a token and in others you won't. But I don't think it's like a linear path that we've moved from ICOs to utility tokens to STOs. I think it depends what you're trying to do. But I don't think that utility tokens are dead. I think we might see more hybrid forms of security, utility being issued together. And I think, what is dead is just raising money for the sake of raising money without anything behind it. I think that, what we will see being regulated going forward is going to be all about protecting the retail network.
And Matt, I know you guys, you still invest in tokens. Recently you invested in LivePeer. That thesis, I think, is all about value capture, right? So how do you think about utility tokens?
Yeah, I think what people term as ICOs have been dead effectively since the end of 2017. I think while a lot of that funding has moved back into private round under Reg D and securities exemptions, which is all good. And I think that a lot of it is out of the light because a lot of these projects are private and sort of building and trying to find product market fit and developing the right teams and strategy around token economics. But the amount of innovation that's happening on what the actual token models are has been astounding. I mean, it was very naive in the beginning where it was like, hey, I'm just going to throw this token in and we're going to pay for stuff and it's going to work and create value. It was a fantastic fundraising tool, but there's a reason that we don't have, pay for our coffee in a different currency that we pay for our gasoline or whatever. It's just inefficient.
When Starbucks coin.
Yeah, it's just inefficient. And so, we spend a lot of time working with early stage companies thinking about, look, not every company is going to need a blockchain and not every project needs a token, right? So figuring out, does it need a token? Why would it have value? Can it provision scarce resources? And then how to actually design it. So whether it's a work token model or it's a permanent equilibrium, or there's a lot of innovation that's happening around what is the right way to not only incentivize all the participants and the stakeholders, but also create a token where the value of the underlying token will accrue commensurately with the utilization of the overall protocol. So it's been fantastic to be a part of that and involved in it, and I think that it's out of the public eye now, but I think as a lot of these projects launch in the next 6 to 12 months, we're going to see a lot more innovation and a lot more media around it.
Yeah, I'm more excited than ever. Having spent six years in the space now, and what's great to see is these teams that have been at it for a while and were out of the public eye. They weren't necessarily doing ICOs and were frustrated, I think, just as much as the people, everyone who really cared about the sector and the long-term growth of the sector. But they were heads down building and realizing, any new technology, new business models, new incentives. I mean, we're not only talking about like new business model, we're talking about a different way of looking at the world. And this is the first time I think that's happened since the internet. When, I remember talking to bankers about email in 1995, and a lot of them said, we'll never use email. These were my colleagues, and they're like, why would I use email when I can just pick up the phone and call someone? It's the same argument I hear against, like, why blockchain in the enterprise, or, why this or why that? It makes no sense. Why internet money? Why programmable money? And one day we're going to wake up 20 years from now, and we're all going to be using this infrastructure in some capacity or another. And all of that groundwork, I'd say, is accelerated in the last few years in terms of getting built. So, there's this first wave of 2013, 14, 15. There was a crypto winter back then. That's when I got into this space. A lot of those companies that were heads down are now leaders in this space. We're seeing this a new wave of the same thing happening that we'll be hearing about some of these new companies a year or two from now.
It's like MakerDAO, the overnight success that took 5 years, right? Agreed. Definitely never, I don't know if there's been a more exciting time to be in this space. In spite of prices being down and we're in a crypto winter, I mean, conferences have slowed, which is great. We're finally seeing conferences start to shut down. So I think that might be the end of capitulation or something close. But there are teams that are doing incredible things, and I know we're all on the front lines seeing that.
And just to add to that,
Yeah.
I think it's a great time to be in venture in the space because the valuations are lower. The teams are building. There's less noise. There's more signal. And so I think vintage 2019 will turn out to be a great year for venture.
Well, we're going to get to the signal and noise section later, so I sent them questions beforehand, so they're ready to go. What about decentralization? Because I think decentralization is a buzzword that seems to be overused, and I know Chris Berniski recently wrote about centralized apps built on top of decentralized protocols. How important is decentralization when you look at investing in blockchain and crypto projects?
So
Anyone can take, by the way.
Well, I agree with you that the whole word has become weaponized and polarizing, but I think it's really back to like a continuum, and there are certain projects that are decentralized all the way. There's others that are might function better in a centralized capacity, such as like digitized assets and building up an infrastructure. But I think it really is like a continuum of trust, really, and so I don't tend to focus on that so much when I'm looking at an investment. I more look at the project itself and what it's trying to accomplish, and then back into whether decentralization makes sense in that context.
Yeah, I agree with that, and I think that people talk about decentralization as if it's this binary thing. Like it's either decentralized or it's not. And frankly, it's like most things, a spectrum. And I would argue that no one will ever be fully decentralized, because I don't think any one of us, if you asked everyone in this room what they think the definition of decentralization is, everyone would give you a different answer. So it's really understanding why does a project actually need to be decentralized, and then how do you get there, and how decentralized is good enough, right? And a lot of times what I think gets missed is it's often the path to get there that's the most important. And who's bootstrapping these protocols in the beginning, who's helping them evolve, and who's being the initial customers and the initial suppliers. That's just as important, arguably more important than the ultimate set of decentralization that you're actually ending up with. And I think on top of that, there's a lot of tech and a lot of innovation that's coming out that may actually make decentralization like even not actually important, right? When you have something like zero-knowledge proofs, you can all of a sudden start proving, mathematically guaranteeing that things are being done right. And so if that's the case, you need 1 million people all over the world to come to consensus that is true or not, right? And so there's a lot of tech and innovation that's coming out that's really going to expand the scope of what blockchains can do, frankly.
I think we're seeing a lot of experimentation. We don't invest in science experience because I mean, we do have to return money to our investors. And so while there's a lot of projects out there that I think are going to be transformative in terms of laying the groundwork for future companies, we look very much at, is this company going to be able to scale to a point where they're going to be attractive to an acquirer, or potentially issue a token where there will be a new avenue of liquidity for, say, a venture fund, or will they be able to stay in it for the long haul and go to a broader, a traditional private market, a public market sale. So it's a balance. I think this notion that everything's going to be decentralized, even though our thesis was around decentralization back in 2014, it's almost like it has
too
changed.
extreme.
Yeah, it's kind of like when things get too hot, I take a step back, or I don't like when people start to quote me. Like it's time to go on to the next thing. So it's and I think it's going to vary by use case. I think it's going to vary by region. I think what I'm really excited about is the intersection of data and AI and the new kind of data modeling that can happen once you start to have decentralized data out there, along with things like zero-knowledge proofs.
Well, I mean, you mentioned a science experiment, right? And I think that today we're almost still in experimentation mode. There's no users, right? Or limited users outside of maybe Bitcoin and actually spending that or stored value for some sovereign nations that are having inflation in their underlying currency. I mean, what is going to get us to adoption where all of us are using these applications or these protocols in our day-to-day lives and don't even realize it? How far away are we from that? And then in your mind, what is the catalyst that's going to bring us there?
I think it's about scale and efficiency of some of the underlying technology. I mean, it's not dissimilar to what we saw with broadband and mobile adoption, right? I mean, we weren't at a point where people could adopt e-commerce, et cetera, because the underlying scale, security, et cetera, is not in place for broad usage. I think a lot of this is going to be seamless and invisible usage. We're going to have these hybrid applications where we won't know where we're going on and off the blockchain necessarily. I want to see a world, hopefully before I die, where we'll see tokenization and more equitable ownership of different assets and around the world, and that will be maybe a more overt use case of it. But even if you look at Bitcoin's history, right? I mean, it started off as cross-border money, and then it's morphed into a store of value, and it's going to continue to morph. And if I look at portfolio companies from 2014, they've already undergone, some of them have undergone several pivots. And that's, again, we're used to seeing companies undergo pivots, but the velocity of that is happening much faster in the sector, and very similar to what we saw in the late 90s, early 2000s.
Yeah, and I mean, scalability and infrastructure, a lot of this is happening in parallel, right? So there's obviously a need for that because you just can't get any sort of applications that you would get on a centralized system in the decentralized world yet, and on blockchains. But I would also add to that education. Most people, still don't understand crypto or blockchain, and I think that something that could set everything off is that an app that we all use every day ends up using blockchain as a plumbing, and nobody really knows it. And somebody comes out and says, "Hey, that app that we all use, it's actually running on a blockchain, and the stuff is real." That could really, really click and make people really interested. The other aspect.
When you said education, I was just thinking, I don't know technologically how email works behind the scenes, right?
Okay.
Maybe, right? I don't have to.
I have no idea how my car works.
Yeah.
I just get it in drive, right? Like,
Exactly.
And I love that. Like, I'm just never gonna know what a piston is, and I just don't care.
Yeah, there you go. You somewhat know.
Somewhere there. And then the other aspect is that comes along with that, I think, in parallel, is actually user interface. Like these are, I think there's a misconception that like blockchain is meant for us, like as users. It's really not. It's a development tool. And it's really hard to use today. If you wanted to use blockchain and you are not a technical person by nature, even with the like, I can tell you where we were a year ago and where we are today is like light years ahead. And like for a new user coming into the space, you're just going to beat the funnel. It's just not there yet. And so I think that as these systems get tried and tested and they work as they're supposed to, you're going to start getting more entrants into the system, and people are going to spend more time thinking less about how can we secure that this works, because it already is, and you can start moving up the layer stack and say, great, how can we now focus our attention on getting users? Well, let's make this seamless. Let's make this quick, plug and play. And I think that's also going to get a lot of users on board.
What infrastructure are you seeing come into place that is necessary to drive adoption?
Like the straight developer tooling. Building on a blockchain is nothing that you would get in the traditional world. Someone looking at Google has all these libraries and programs, languages available to them, and in crypto you just don't really have that. And I think what you've been seeing to date is that a lot of projects are doing everything. So if you're an application, you have to figure out, how do I build on top? Nobody's really helping you. How do I actually get the information out of the blockchain that I want into my application? And then I have to also build my application and find product market fit and deal with customer acquisition. Like, that's a lot. And so what you're starting to see now is that a lot of the components on the back end are becoming much more modular, as they sort of should be. You're getting people who are specializing in companies that are just going to query data for you. And they're going to say, hey, we're just going to say, if you want to get data out of the blockchain, you use us. Pay us, per ping, a micropayment, and I'm going to get all the information you want out of Ethereum or whatever blockchain. I'm going to put it in your app. And now you actually don't have to worry about that at all. You can refocus your efforts on what your core competency is, building whatever application you want. So there's like little things like that most people I think don't necessarily see, but are a lot of problems that engineers and developer talent have in the space of that, which is getting solved.
So I agree with what was said, but I would also add that there are certain places in the market where infrastructure build-out doesn't necessarily have to happen, and the consumer behavior is already such that they're accustomed to paying for things digitally, and one of those areas is non-fungible tokens and gaming. So I think that we'll probably see something along the lines of CryptoKitties, but even much greater than that, and probably that will be a turning point in the consumer adoption moment. And then on the other side, non-crypto, but digitized assets, we have tons of players rushing in to build that infrastructure now, from broker-dealers to qualified custodians to exchanges, and I think so that will, once that infrastructure is built and once we see some high-yield deals come through and start trading, that will attract more institutional involvement in the ecosystem.
Absolutely. I think it's clear from your answers that you're all focused on different areas in the space, and it's that's one of the things that's most exciting about this industry is it literally covers every other industry vertical, and then you have the whole stack. So on that note, I guess I'm curious what you're most excited about in the industry today, kind of what trends you're looking at, or even, no specific companies, this is not investment advice, but what trends are most exciting you? You mentioned the NFTs, Nisa, that's
Right.
one. What else?
Tokenized real assets, such as real estate, and venture funds, and art, and other things that could be fractionalized that will allow more investors into the space globally. That will solve some of the liquidity issues in illiquid assets. And that will allow automation of those assets to be done in a much more efficient way, and governance to be handled much more creatively. So for instance, if you're Facebook and you wanted to reward your shareholders that have held the stock the longest, there's no way really for you to know who all your shareholders are. However, down the road, if Facebook decides to do a digitized offering instead of an IPO, then they'll be able to reward those shareholders. They'll be able to issue proxy voting and dividends and other cap table management functions automatically. And that's exciting to me, is that this vastly improves the existing financial infrastructure that we have, and so I believe that's inevitable.
Great. And that'll replace, I guess, there's one centralized party right now for shares. Is it DTC? Is that DTCC? Yeah. So every stock trade basically goes through their vault. Interesting. What about you, Matt? What are you excited about?
I mean, like Jalak said, there's so much to be excited about, frankly. But one of the interesting things that's gained a lot of traction is the concept of open finance and decentralized finance. And I think one of the real superpowers of blockchain is access, and inclusion for everybody on a global basis. And so, just getting, we're sort of rediscovering. I think a lot of people in the world, or in crypto at least, are rediscovering finance sort of for the first time, which is interesting in and of itself. But what I find really interesting is that there's this whole system that's being built outside of the traditional rails of what we have today, right? And somebody anywhere in the world can, in a permissionless way, go get a loan that's super over collateralized. And be able to extract, value from a system without having to go to a bank that they may not have, or they may not have identification, they may not have a bank account. Like there's a lot of ways that we can empower, humans on a global basis, and I think that's one of the most interesting things to see how all these, pieces of data that float out there and represent value can be used and rebuilt and rebundled in different ways to add value.
So, go ahead, Jalak.
I totally agree with that. And like BitPesa was one of my first investments. And I was born in Nairobi. And so the emerging markets were really where my mind went when I went to my first Bitcoin conference, because we don't have legacy institutions in place, whether you're talking about banking or insurance or almost anything in a lot of these regions. So there's nothing to really disrupt. There's only opportunity to create. And so I am looking, Africa's a market that I think most US VCs stay away from. We were in there very early in this space. What's great is I think there's going to be a combination of talent that's in developed markets that is addressing some of the opportunities in some of these, frankly, less regulated markets. Now that doesn't mean it's easy to get to market, because you have lots of other issues like corruption and intermediaries of different sorts in these regions, but that allows a lot of experimentation. Matt, you mentioned value extraction. I think about it broadly as value creation. Like for the longest time, it was all about extraction. If you even look at the environment, extracting resources, extracting dollars from one party to another, data. Now we're going to flip around, and we're going to see that actually the pie can be bigger when you have more participation, whether it's at small businesses, individuals, or larger enterprises. And the companies of the future are going to look a lot different. I think we're making a lot of progress in terms of the concept of the DAO, the decentralized autonomous organization. It didn't work in version 1.0, but there's lots of smart people working on how do we make it work for the next iteration.
Yeah, and we just saw, I think, Moloch DAO released to provide grants for the Ethereum community. That's just a fascinating experiment to track. I want to go back to a couple of things. So we're talking about emerging markets now. I think Abra just released, I think you can buy NASDAQ shares on the Bitcoin network through Abra, which is an incredible innovation for middle-class individuals overseas that don't have access to our markets. I think that's great. I guess, do you believe that we'll be able to jump in emerging markets the same way that they jumped over wired to mobile, to wireless? Do you think we'll be able to jump to these decentralized protocols, or is there a middle step that needs to be taken in the interim, right? Like, is there lower hanging fruit, so to speak, in Africa that can solve some of the problems that maybe blockchain cannot?
Well, Abra is an interesting example. I mentioned pivots, right? I was a pre-launch investor in Abra. And the original business model or idea there that Bill had was use the Bitcoin blockchain as a rail for cross-border remittances. So very similar to what BitPesa is doing, but for the rest of the world.
And Walla as well in Africa, right? Is it?
Yeah. But then what happened was all these people in like the Philippines and these markets that they were targeting said, well, we want to actually hold Bitcoin. We read about this, and we don't necessarily want to cash out in our local currency. And then that model has evolved, and they built a stable coin on the back end because They had to, right, to hedge the transactions that they were building for the remittance rails. So that's an example of they did leapfrog in a big way because these people in emerging markets were demanding this access to, and we're talking about smaller amounts of Bitcoin. Like if you look at remittances, they're in terms of individuals, much smaller amounts, but well before most people here would feel comfortable holding a cryptocurrency. So I would argue that, I approach it as it's a given that these markets are leapfrogging and will leapfrog. It's like WhatsApp. It's going to be maybe in different transaction values, but the volumes are going to be there. Let's do that.
Ooh, you just sparked a new question because you mentioned WhatsApp. So let's talk about Zuckbucks.
Is that what it's called these days?
That's what I'm calling it. I don't know if I coined it, but you can say that I did. Facebook obviously made this big announcement that they're entering the market. They're building out one of the largest blockchain teams out there right now. JPM announces JPM Coin. We're seeing a lot of the existing players enter the space in one way or another. I guess first let's start with, is that good or bad for the industry? Let's start with that.
It's great. It's great for the industry. Like, you have the most regulated institution on the planet, JP Morgan, releasing a cryptocurrency that they call a crypto. It's not, but they call it cryptocurrency.
And why not?
To all their clients. I mean, it offers nothing that a traditional cryptocurrency has, right? It's not immutable. It's not permissionless. It's not decentralized. I've never seen, I have a traditional finance background. Like, I've never seen so many people get excited about effectively a balance sheet adjustment. It's like intercompany accounting on steroids. Right? It's the ability for one person to pay another within the JP Morgan system, and just it happens instantly, right? And so that's really powerful because now all the people that work at JPM now have to pay attention to this. They have to understand what a blockchain is, why it's valuable, why we're using it, and how to deal with tokens and wallets. All their customers now have to do this. And what their customers are going to see pretty quickly, and we're seeing this on the market infrastructure side, like OTC desks, they don't want our fiat as collateral. Like they want, stable coins because they get 24/7 settlement. And that's really powerful for a lot of companies, especially when you think about capital-intensive companies or companies that have working capital. Like this is going to change the game for that, right?
Or even startups that need funding and it takes 2 weeks to clear bank statements instead of just getting a stablecoin investment.
Exactly, and so
in
now
15 minutes.
So what you're doing is you're onboarding all of these traditional, white-collar, folks to understand what cryptocurrencies are and why they're valuable, and you see them in the tangible in the day-to-day business. All of a sudden you start, that helps them get that further down the rabbit hole and say, well, what are the other things that I could do? What is a real cryptocurrency, I would say, and why does that have power? And that's not so different than what they're sort of accustomed to.
But what about the crypto anarchists? I mean, what about the individuals that, consider themselves to be building a system outside of the system? How do we as investors consider that population, that community, who see something like JPM Coin as trying to co-opt this movement?
So I don't think it's a competitive. I think that's what people miss. It's complementary. And so it's complementary from an education perspective. There's no better way to get 1 billion people onboarded than to use it every day and what they do already, right? And then it's only a matter of time until people start to understand what are the differences between JPM Coin versus like a Bitcoin, and why is Bitcoin valuable? How is it different? What is this system providing me that the existing system doesn't? So is it a way to opt out? Is it a way to hedge? Is it an insurance policy? Is it value creation? There's just a lot of different ways. So I think that, the crypto anarchists, like, it's still going to work. Like, crypto is still going on, and this is just a complementary way. I view it as like free onboarding. Like, great, let them do it. But what we're all focused on are the opportunities, away from centralized stuff and into decentralized applications and infrastructure. That's where a lot of the value is going to be created, and it's going to continue.
So, but my question really is about the timing of JP's announcement, because they were publicly, against some of the stuff that was happening in the market like a year earlier. So what switched to create this announcement now, to create this product? Maybe it was in the works for years, but why now?
They've been working on it. They've been very good. I mean, they've always had one of the largest blockchain groups on Wall Street. So I don't think they changed anything. It's the way the press has.
The press.
I mean, it's not JP Morgan changing anything. I mean, Quorum, has been worked on and has been incorporating some of the public blockchain technology for years and years. So
Every
Yeah.
bank has a blockchain group. Like, it may not be public, they're not shouting it from the rooftops, hey, I'm working on blockchain, but I can guarantee you every banking group has a blockchain group. And what they do with that and how they drive that decision making is very different, right? There's some that are saying, how can I use blockchain technology to get bigger market share and increase our revenue? Others are saying, hey, it's actually easier, why don't we just use this on the back end and we can cut a lot of different costs. So the strategies of each bank is different. But the fact that everyone under the sun is doing something here, like, guys,
Great.
we're onto something. Like,
Yeah, that's why we're here. So I guess I want to go back to a couple of things. One question I have is, what time horizon do you all think about when you invest? Because product market fit is this interesting beast, right? And some people say with open source, product market fit actually comes in two phases: first with developers, then with users. So I look at something like, I'll just throw out Dharma Lever, right? That just came out, and it talks about democratizing finance and this trend of open finance, and everyone should have access to to reasonably priced loans, and emerging markets should have reasonably priced loans. And yet the main use case right now is leverage for speculating on crypto assets. So how do we maybe it will grow into something different, but how long is that time horizon? And I love the Dharma team, by the way, and there's some Penn grads on that team, so I don't mean to single them out, but how long do you think about when you think, what is the time horizon you use when you think about investing in these companies?
So in a venture scenario, you're investing for the long term, and sometimes that's 5-8 years, maybe even longer, and a few pivots along the way. So I think you always have to be focused on that time horizon and that lens, and getting to product market fit hopefully earlier than later. So I think if you're actively trading, that's a much different time horizon, right? That you're looking at the markets every day, you're looking at the prices of the coins.
But then I guess what's the point of liquidity, and what's the point of having a token, that investing in a token, does it create misaligned incentives for investors as well? I don't know. What do you think?
So I think that, look, I think crypto is early stage. It's akin to early stage venture investing, high risk tech investing. And so, we invest with the intention to hold for, frankly, as long as it takes for our investment thesis to play out, right? In many cases, we think this is early and there's a lot of opportunity.
Even your token investments?
Yeah, no different. But what's different,
What
I think,
happens
is,
when they turn against you? Like
so
the price, I mean.
what's different is that I think if you're thinking about venture capital investing, you typically are investing around illiquidity, right? You're owning 30 to 40 different assets. Most of them actually go to zero, right? And if you have marginal return and a couple of their home runs and they return your whole fund, right? So I think if you're going to think about venture investing, and you went to a venture investor and said, imagine everything is the same and you had your investments had liquidity, would you construct your portfolio the same way? And I think the answer would be no. And so that's what we try and do is we embrace the liquidity and we say, how can we construct a better portfolio and how can we use it to actually manage our risk? And so I think that's something that we do that's a little different, and I think it requires, it's nuance. Crypto doesn't necessarily fit in venture capital.
Not to mention the legal structures.
Yeah, and it doesn't, but it doesn't also fit in hedge funds either, right? It's somewhere in the middle, and so I think approaching it from first principles and sort of creating a crypto native strategy, I think is optimal.
Anything to add?
I've been thinking a lot about that. I mean, I'm excited about having more liquidity. I don't, love having offering, 10-year liquid. I mean, it's much harder to raise money. I don't know. You can argue, depending on market conditions. But so, but where I think this matters, I mean, we always look at team first and foremost. But given all the pivots, given all the different models, given that you want to invest in the right incentives, the right motivations, or aligned motivations, that's where I spend a lot of time with the teams up front. And that's why we stayed away from that ICO market, because there wasn't time.
It was frenzied.
It was a frenzy, and it's like and this happens in venture, non-token markets where a hot deal you'll have to sign overnight. We never participate in those. So I think team is just so important in alignment with the thesis of the fund.
So and so's already invested. This person's invested. You got to get in quick, or you're gonna miss it.
I've seen all of them on board. I've seen all, I haven't.
It's crazy out there. I guess my question is though, it's almost the liquidity provides a challenge as an investor, because it's almost irresponsible if you have an investment that you made and it appreciates, let's say 5x in value in a short period of time, but you're long-term, you have a positive long-term view and you don't take gains, knowing that there's going to be, market cycles and it will come down, right? So, I mean, how do you think about de-risking those investments? It's a challenging question.
We're not, I want to hear from you, actually, so I'm just going to pipe in here. And it's, at the end of the day, we need to we have target returns for our investors, and we're portfolio managers.
Yeah.
And so I always look at any opportunity. There are a lot of secondary opportunities in equity investments too these days because of the amount of later stage money coming in. We almost always have an opportunity to exit in later stage rounds, and it's really and I think it's also communicating with the entrepreneurs that we are long-term investors, but at a certain point we may need to exit. And so I think it's up to us as portfolio managers to have those conversations with entrepreneurs. But we might quickly flip.
Yeah, I mean, we're not ICO investors. That's not how we built our firm. But it presents an interesting, sort of dilemma.
Yeah,
it's really
sure.
how do you think about portfolio construction? How do you think about risks and trade-offs, right? And so there's being really into the underlying tech and understanding it. There are different risks that we may see that the rest of them might be covered because our knowledge base is different. And so we may trim a position because of there's execution risk. We may add to a position, right? That flexibility is both a benefit and a curse, right? And so it really comes down to strong risk management and really, the problem with crypto is not that there's no data, right? There's no 10Q and there's no 10K and there's no conference call. There's actually the opposite. You have more data than it's too much data, right? And you have to go to 10 different places to get it. Right? You have to go to Telegram and Reddit and Medium and Twitter and conference calls and developer
And
meetups,
conferences.
right? And so how do you take all of that information and test it against your investment thesis? And I think when you're investing in early stage nascent technology, the market moves very, very quickly. It's the fastest market
Well,
ever.
this is a perfect segue into our final segment, which is signal versus noise. So it's going to be a lightning round. I'm going to mention one trend that's kind of hot on the market right now, and you're going to answer either with signal or noise. Okay? All right, here we go. Are you guys ready? All right, I was really excited about this one. We're going a little bit over, but this is going to be great. Okay. Signal versus noise. Security tokens.
Signal.
Ooh.
Yes.
Oh no, come on, that's not the round. Let's go.
I think it's signal long-term, but
Short-term noise.
Yes.
Product market fit issues for sure.
Yes.
Okay. Same?
Agree.
All right, fine. I'll allow that little maneuver. Savvy investors over here. Okay. Open finance, signal or noise, or DeFi, or DopeFi, whatever you want to call it.
Same answer.
Oh, okay. Matt, what do you think?
I think signal.
Signal?
I think signal.
Signal. Okay. Initial exchange offerings. This is a toss-up.
Noise.
Depends on the project.
He has a project coming up. That's probably it.
I didn't even know what it was.
Great. That's so it's noise.
The concept is great, but it's only as good as the project that.
We can have a whole panel on IEOs for sure. I agree. It depends on the fundamentals, and it's just another distribution method.
Yeah.
NFTs. Nisa, you mentioned them earlier. Signal. Signal. I love
Just
this.
say noise.
Noise. Okay. ETH is dead. Signal or noise?
Too early to tell.
I like your answers.
I mean, it's not nearly dead.
Okay. So noise.
Yeah, I agree.
Okay. And that's about the time that we have.
It wasn't as exciting as
Oh, it was so exciting. Come on. Thank you, panelists.